This video will fly. The Senate hearing, which took place live yesterday with the former top executives of the failed Silicon Valley Bank and the Signature Bank, well, they testified in front of very feisty members of Congress. I have captured, I think, the best moments for you, just about 28 minutes of a 2-hour hearing. Enjoy.
Chair Brown, Ranking Member Scott, and members of the committee. Thank you for the opportunity to appear before you today. My name is Greg Becker, and I was the Chief Executive Officer of Silicon Valley Bank. I believed in the bank and its mission, and I cared deeply about our more than 8,000 employees and their families. Unexpectedly, on the same day, Silvergate Bank announced its intent to voluntarily wind down and liquidate, and depositors triggered a bank run. Despite stark differences in our business models, news reports and investors wrongly lumped SVB and Silvergate together. Rumors and misconceptions quickly spread online, culminating on March 9th with the first ever social media bank run, leading to $42 billion in deposits being withdrawn from SVB in 10 hours, or roughly $1 million every second.
Thank you for the opportunity to be here to discuss Signature Bank and my role as chairman of the board. In 2018, we began accepting deposits from businesses in the digital asset sector. I supported this effort because I believed that the digital assets payment systems can make financial transactions faster, easier, and cheaper, with funds moving from place to place in minutes rather than hours or days, and at a much lower cost than traditional payment systems. In the latter part of 2022, the digital asset sector experienced increased volatility, and regulators expressed concerns. Signature Bank took these developments seriously, and in just a few months, significantly reduced its digital asset deposits. On March 7th, the bank with strong ties to the digital asset sector announced it was going out of business, and 3 days later, a second bank, Silicon Valley Bank, was seized by regulators. And then, within just a few hours, our depositors withdrew $16 billion from the bank. On Sunday, March 12th, regulators seized Signature Bank. Although I disagreed with this decision, I recognize the important role that bank regulators play in our financial system. For that reason, March 12th, 2023 was a devastating day for me.
Mr. Becker, your version of events blames SVB's failure on too many interest rate hikes, a social media-driven bank run, the closure of the much smaller Silvergate Bank, and the regulators for being slow to highlight its long-standing problems. It sounds a lot like the dog ate my homework. Your explanations ignore that your bank was without a chief compliant officer for the better part of a year. I don't think that was in your testimony. While you watched deposits leave and losses on long-term investment securities began to pile up. Mr. Shea, one of Signature Bank's fatal flaws was a concentrated depositor base that made it susceptible to a bank run. FDIC and New York banking regulators identified this as a problem. Signature Bank management assured them the bank's relationships and dedicated customer service would make customers less likely to flee. The bank ended up with an extraordinary level of client concentration. The numbers, frankly, are hard to believe. 60 clients held 40% of total deposits, 4 depositors accounting for 14% of total deposits.
However, in the past 2 years, the Federal Reserve issued not 1, not 2, but 30 supervisory findings which identified issues in areas like risk management, board effectiveness, and interest rate simulation and modeling, all of which directly contributed to the bank's collapse. These findings were not publicly available. All of this happened in a 2-year span when you and other executives sold $84 million of SVB stock. So, Mr. Becker, do you think supervisory warnings about your firm's risk management and governance are material information?
Senator, I completely understand the question. The regulatory findings are either private and confidential, or the regulators can choose to make a public enforcement action, which they chose not to do.
The question is not what is that process. The question is they decided not to make it public. You had material information. The question is that material information or not?
I didn't believe it was, sir.
You didn't believe it was. 30 different supervisory findings, all of which are elements of the collapse of the bank, and you didn't believe those were material findings. Maybe you can understand why a shareholder or observer on the outside might think differently. In January of 2023, your firm's compensation committee approved cash and stock bonuses to executives and employees for their performance in 2022. According to public reporting, those bonuses were paid on March the 10th, mere hours before regulators seized the bank. Do you believe you and your colleagues earned the bonuses paid on March 10th? Yes or no?
Senator, those bonuses were predetermined on a predetermined date, which I was not familiar with when those were going to be paid.
Do you intend to return any of the bonuses you received? Yes or no?
Senator, I'm going to cooperate with the regulators as they go through the process to look at that specific area.
When interest rates go up, the price of government bonds, especially long-term, long maturity government bonds, goes down, doesn't it?
Yes.
And you don't have to be Einstein's cousin to know that, do you?
No, you don't.
Okay. Now, your bank had 55% of its assets invested in government bonds, didn't it?
Roughly, yes.
And the Federal Reserve raised interest rates, didn't it?
Yes, it did.
And the value of your assets went down dramatically, didn't they?
Yes, it did.
Okay. And you didn't have hedges, did you?
Senator, as previously mentioned, the decision around hedges was made by our Asset Liability Committee.
Mr. Becker, you were the CEO of the bank. You didn't have hedges, did you?
Senator, there were hedges that were put in place, but I don't recall the details around when they were put in place.
You're the CEO, and you had 55% of your assets in government bonds, and you don't know whether you were hedged or not?
Senator, as previously mentioned, I don't have access to my SVB documents, so
well, I know that, and I wasn't CEO. You weren't hedged. Now, if you'd bought those hedges, that would have cut into your profits, wouldn't it?
Senator, I don't know the details of the decisions that the team were evaluating.
But if you bought a hedge, the hedge cost money, and it would have decreased your profits, wouldn't it? Do hedges cost money?
Yes, they do.
And so if you bought hedges, you'd have less money, right?
Senator, it depends upon, yes, they would cost money, but it depends upon how the hedges
And if you'd made less money, that would have affected your bonus, wouldn't it?
Senator, our compensation was predominantly long-term in nature, and so I know there's been lots of discussions about compensation being short-term.
Mr. Becker, you made a really stupid bet that went bad, didn't you?
Senator,
and the taxpayers of America had to pick up the tab for your stupidity, didn't they?
Senator, there were a series of events, unprecedented events that occurred that led us to where we are today.
No, this wasn't unprecedented. This was bone deep, down to the marrow, stupid. You put all your eggs in one basket. You put all your eggs in one basket. And unless you were living on the International Space Station, you could see that interest rates were rising and you weren't hedged.
Watching
your bank went
and
broke.
Participating.
How much time did you spend? You conducted pronoun seminars, didn't you? What's a pronoun seminar?
I introduced a seminar organized by 300 of my colleagues, just as I went to ping pong
tell me
tournaments.
what it is. You spent a lot of time doing pronoun seminars, lecturing people about how they ought to use the right pronoun, gender-neutral pronouns, didn't you?
I actually spent no time beyond introducing that
Well, I
seminar.
could show the seminars, but I won't do it.
I was.
What did that have?
Senator Kennedy, your time has expired. Senator Reid from Rhode Island.
Thank you very much, Mr.
Never
Chairman.
mind.
So I'm looking at the year 2022, and I'm looking at a dramatic drop in the stock price of Silicon Valley Bank. I'm looking at a huge increase in the amount of uninsured deposits. And I'm looking at your end of 2022 bonus of $1.5 million. So my question to you is very simple. Sitting here today, do you believe you should have received a $1.5 million bonus after the performance indicators I just referenced?
Senator, if I could clarify one point. The uninsured deposit level from a percentage didn't change during 2022, at least to my knowledge it didn't. It had been at that level for as long as I can remember. As far as the compensation, that was determined by the board of directors, signed off by the board of directors based on the performance, their evaluation of that performance in 2022.
31 unresolved supervisory issues. But the big paychecks for you kept rolling in. During that 4-year period, you collected almost $40 million. Mr. Becker, the collapse of your bank cost the FDIC fund about $20 billion, money that someone is going to have to make up. Big banks, community banks, depositors, consumers, somebody. So I want to know about basic accountability. How much of the $40 million that you earned from loading up SVB Bank with risk are you planning to return to the FDIC?
Senator, if I could clarify one point, and then I'll answer your question. Compensation, I know there's been a lot of discussion about is it long-term or short-term, and it's short-term focused.
I have a very simple question. You cost the FDIC fund $20 billion. You made $400 million doing that. How much are you planning to return to the fund?
Senator, I disagree with the number you just quoted, but
what, you don't, that's not your paycheck? Or it's not how much it costs the FDIC? Those are both a matter of public record. How much are you planning to return to the fund?
Senator, the number you just quoted was $400 million.
$40 million, sorry, $40 million.
I was disagreeing with that.
How much of the $40 million are you planning to return? How many times are we going to do this dance?
Senator, I promise to cooperate with the regulators as they do.
Are you planning to return a single nickel to what you cost the fund?
Senator, I know there's going to be a process review of compensation.
I'll take that as a no. All right, so let's turn to our next one, Mr. Shea. Mr. Shea, Signature Bank's leadership was right there with Mr. Becker. Mr. Shea, you were the chair of Signature's board for the entirety of its 22-year existence. I understand you were also the chair of the risk committee for 22 years. So let me ask you, in 2019, once Congress weakened the laws, how many formal warnings from the FDIC about your bank's liquidity risk management issues were outstanding? Don't know? Does number 18 sound right?
Yes.
Yeah, okay. In fact, you were still chair of the risk committee in 2020, 2021, and 2022 when Signature received more warnings from the FDIC and, quote, never adequately addressed the liquidity risk management concerns. So from 2019 to 2023, while the FDIC identified an additional 45 liquidity risk issues, you racked up more than $20 million in pay. So, Mr. Shea, the collapse of your bank cost the FDIC fund $2.5 billion. So how much of the $20 million that you earned from loading up Signature Bank with risk are you planning to return to the FDIC?
I believe that Signature Bank was a responsibly managed bank, solvent until the end.
Yeah, well, I'm sorry. Your
is,
opinion on what is a responsibly managed bank is now laughable. So you're planning to return how much?
The answer is
none. That's
I am
it?
not planning to do so, no.
Okay, so here's the thing. Right now, the law says that people like Mr. Becker and Mr. Shea can come to Washington, they can lobby for weaker bank regulations, they can load up their banks with risk, they can pay themselves tens of millions of dollars in bonuses and stock options, and when the banks blow up, Mr. Becker and Mr. Shea get to keep all the money. And that is just plain wrong. And if we don't fix it, every CEO for these multi-billion-dollar banks will keep right on loading up on risks and blowing up banks, and everybody else is going to have to pay for it. And that is why Senator Cortez Masto and Senator Hawley and Senator Braun and I have introduced a bill to claw back these crazy paychecks and make it just a little less profitable for bank CEOs to blow up the banking system. I'm working with a bipartisan group right here on the Banking Committee, and I hope Congress does the right thing and that we get to mark this bill up, I ask respectfully, as soon as possible.
Thanks, Senator Warren.
Thank you.
Time's expired.
Here, but what were the amounts of your cash bonuses in 2021? Do you recall?
2021, I believe, was $3 million.
And your cash bonus in 2022 was?
$1.5 million.
So in 2022 in particular, you paid yourself a $1.5 million cash bonus, even as the stock, the value of the company that you were managing declined by 2/3. That's not bad work if you can get it. As Senator Kramer and I were joking, we would be willing to screw something up for much less than $1.5 million.
Today is about financial mismanagement by bank executives, which is where the lion's share of the blame should rest. Mr. Becker, thank you for being here. Page 6 of your testimony states that, quote, on the advice of Goldman Sachs, you decided to sell your AFS portfolio first. Did Silicon Valley Bank retain Goldman Sachs as a financial advisor or fiduciary?
Goldman Sachs was the investment bank that was running the transaction for us, so they were our advisor.
There's a news article today in the Financial Times where Goldman Sachs informed SVB in writing, quote, we would not act as their advisor on the sale, and SVB should not rely on any advice from the bank in this regard, but instead hire a third-party financial advisor, end quote. Is that an accurate letter that you received from Goldman Sachs?
Senator, I don't remember reading that document.
Mr. Chair, I'll just submit this for the record. This is an article in the Financial Times today, and Goldman Sachs provided this information to SVB in writing. So the way you phrase your testimony implies that Goldman Sachs advised you to sell the portfolio like a financial advisor would. But we see here there was a letter where they were not retained as a financial advisor or fiduciary. If they were, you would have a contract. So it seems like they were acting in a principal capacity, perhaps as a bidder for the assets. Did SVB have a financial advisor advising on this transaction in March of 2023?
Senator, the sole investment bank that we were working with at that time was Goldman Sachs.
Okay, so either Goldman Sachs did write a letter saying that they would not be your advisor on the sale, or they did. So what did Goldman Sachs advise you in this contract that we're not sure exists and that Goldman Sachs says does not exist?
Senator, the only thing I can do is give my memory of what happened. And again, I don't have access to the bank documents, but my memory is very clear. It was, as we were looking to do two things. One is raise equity, and the second one is to sell all or a portion of our AFS portfolio. Goldman Sachs was the investment bank we worked with on both. And as we were having the discussion with our board of directors, or specifically the special committee of the board that was really the ones working with the management team on this, the direct feedback that we received from Goldman Sachs is that to show the purpose for the fundraise, the capital raise, because otherwise our capital ratios and liquidity was strong, we would need to sell the securities first to show the loss and then to bring the capital on board later that day or the next few days.
And was Goldman Sachs your advisor on that sale?
On the sale, Of the securities.
That you're just describing, yes.
Goldman Sachs was the investment bank that we worked with on that.
Mr. Chair, it might be useful to try and get a hold of this letter because Goldman Sachs says that they informed SVB in writing that they would not be the advisor on this sale.
So tell me, what did you do wrong? In reflection, looking back over the last 5 years, and particularly the last 3, what could you have done differently to prevent this from happening?
Senator, I've thought about your question, especially over the last 8 weeks, pretty much every day. And, you know, it's amazing. I mean, hindsight, we can look at the fastest rate rise
Absolutely,
in 4 years.
and that's what I'm asking you to do. In hindsight, what could you have done differently? We can have the best quarterback in the entire country win a Super Bowl. He even goes back and he dissects film to see when he should have stayed in the pocket longer, when he should have moved here. Everyone does this, especially the teams that lost. You lost, and you lost big. When you dissect that, what could you have done differently?
Senator, I think about the when we were making the decisions, so the investments and when our team made those decisions, I truly do believe that we made the best decisions
you
we
think,
could.
yeah, I only have a minute and 19 seconds left. Let's get to it. There is nothing you think you could have done differently.
Senator, if the...
No, yes or no? Is there anything you could have done differently?
If the team would have known it was going to be the fastest in race in history, I believe they would have considered different decisions.
So you still take no responsibility for any of this?
Senator, I was the CEO of Silicon Valley Bank. I take responsibility for what ultimately happened.
Okay, if you take responsibility, then will you give that $1.5 million bonus back?
Senator, as I previously said, I'm going to cooperate with the process that
But I mean, will you do it? You don't have to. I mean, will you do it? Let's say they say, no, you don't have to give it back. Will you give it back? Because you said you care about your 8,000 employees and their families. You say you care about everything you've put everyone through. There are CEOs in banks all across this country that are having to pay up for your mistake. You said you went to Hawaii. Did you have a chance to walk on the beach, sit on the beach? And when you did you think about what you've done to these people? And if so, will you give back the $1.5 million from your FY 2022 performance?
Senator, as I previously said, I'm committed to cooperate with the process, with the regulators and other agencies that I know are going to be looking into that specific question.
Okay, well, I hope even if for whatever reason they say you don't have to, I hope that you dig deep and you decide that that needs to be somewhere besides in your pocket. Thank you.
Senator, I think one of the reasons that we're here to testify today is to provide as much information as possible to this committee and to the regulators to understand what happened so that it can be prevented.
So what do you tell those banks that are out there that are having to pay the additional cost, the special assessment to cover your bank's failure? Any statement or words to them?
Senator, as I mentioned in my both written testimony and oral testimony, I'm clearly sorry for the impact that SVB has had on clients and including small business, including small banks.
Mr. Shea.
I don't have a response. I don't know.
Mr. Howell.
I have no position on that.
And you mentioned in your testimony digital assets 10 times, implying that digital assets was a driver of Signature Bank's collapse. So I want to explore that a little bit. Did Signature Bank hold digital assets?
I didn't. Signature Bank did not hold or custody any digital assets, but I just want to clarify one thing.
Did you trade digital assets?
No.
So the point here is you had depositors that were in the digital asset industry, correct?
Yes.
But the deposits were in U.S. dollars. They were in cash, like any other depositor, correct?
Yes, all the deposits were in U.S. dollars.
Okay, so according to the New York DFS, deposits from digital asset businesses in cash, not crypto, made up about 18% of total deposits prior to your bank's collapse. Also, according to New York DFS, outflows on March 10th were relatively proportional, meaning depositors who had nothing to do with digital assets were responsible for the significant majority of withdrawals during the run. Do you agree with that statement?
Yes, I did not point earlier, as in the first part of your first question, to digital assets being a particular cause or not.
Well, you used the term 10 times during your testimony, and then later, of course, in the previous questions from Senator Cortez Masto, you've placed blame everywhere, but accepted absolutely none yourselves. Now, from the FDIC, the root cause, this is a quote, the root cause of Signature Bank's failure was poor management. Signature's board of directors and management pursued rapid, unrestrained growth without developing and maintaining adequate risk management practices and controls.
10 interest rate hikes is what happens. 10 interest rate hikes in about a year sends a signal of what is actually happening in the marketplace that seems to have been completely ignored by the bank execs.
Do you believe that poor management and decision-making were principal factors in your bank's failure?
Senator, what I tried to articulate in my written
yes or no,
testimony,
do you believe that poor management and decision-making were principal factors in your bank's failure? Yes or no?
Senator, I believe it was a series of unprecedented events that all came together in the fastest bank run in history.
Did you make any poor decisions?
Senator, based on a previous question that was asked about looking at in hindsight, I truly do believe that with the information we had at the time when we made our decisions, that we made the best decisions that we could have.
I'll close the hearing. Mr. Becker, you've blamed pretty much everyone else for SVB's failures. We've heard that from people on both sides of the aisle, the Fed, your employees, the board, social media. It's hard to believe a 30-year bank executive and CEO for 12 years should have needed a roadmap from the regulators to find the obvious problems that needed to be fixed and weren't. Both banks sadly suffered from an unwillingness to fix known problems. The hearing certainly proved that. I think we already thought that. I expect these failures will be a warning to other executives to think about the long term and to address problems, whether or not the regulators have identified them multiple times. Thank you for the witnesses, for your testimony, for senators who wish to submit questions for the hearing. Those questions are due 1 week from today, Tuesday, May 22nd. Witnesses, please submit your responses to questions for the record 45 days from the day you receive them. Thank you again for your testimony today. The hearing is adjourned.